Good morning, everyone. Welcome to binary.com. This is Chris speaking, and we're going to take a look at the market together and look at the charts and see what technical analysis can do with predicting this week's price action potential, right? Now, before we do that, in fact, you must be aware of the risk disclaimer and the risks involved. Of course, global financial markets and Forex is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Of course, all things said and done here are just indicative and may not happen at all, and are just for educational methods and purposes. All right, so everyone here should be aware of the risks involved. Now, this is a live webinar, but if you're watching the recording, please pause the video to read the entire disclaimer. And if you're watching the live webinar, please wait till you can watch the recording and pause it to read the entire disclaimer. All right, so this is a live weekly webinar, always live at 8 a.m. Monday. But if you want the recording, you can get it by registering yourself at blog.binary.com/weeklytradingroom with your name and email address. For now, we're going to take a look at the economic calendar. We're going to take a look at the euro, pound dollar, dollar yen, Aussie dollar, and XAU USD. Alrighty, now last week, of course, we had the NFP figures on the USD, which were negative or lower than expected, basically. Unemployment rate did fall, though, but all in all, it had a bullish expectation for the euro dollar, or that's the effect it had, the impact it had on the euro dollar. This week, what do we have? This week, we have a bank holiday in Japan, and we have Fed Chairman Yellen testifying tomorrow, which is, of course, could be interesting for the market. Wednesday, we have Bank of England governor speaking, plus the inflation report, plus the ECB president speaking, and the Aussie unemployment rate. Thursday, normal core retail sales, and Yellen again testifying, and that's about it for that week, roughly speaking. With that said, let's head over to the charts and take a look what we can expect for the currencies. First of all, the euro dollar. The euro dollar, of course, is stuck in a triangle or a wedge. And the lines important on this chart are the purple lines. Still haven't broken out of them. That remains the same as last week. Nothing changed. We're still waiting for a long-term perspective. We're still waiting a break either to the upside or below it. To the upside, we would also have to break above this top and the 61.8 fib, and we can see a potential breakout to the 78.6% fib right here at 143.20. But that's only we can expect that upon the break of the resistance. The opposite would hold true for a break of the triangle to the downside when we break the triangle, the trend line here, and we could expect a fall. In fact, let me color that red to challenge these bottoms where we have here. What price levels are those bottoms? The first bottom is at 133. Then we have a bottom at around 131, and then all the way around 127.50. All right, so that's the potential when we fall, when we break this trend line to the downside. Let's zoom into the daily chart. And you can see that we recently had a bounce during NFP. In fact, we had a bounce to the upside, and we're approaching these tops in here. If we break those, there's a potential to retest at least this. But the question is, can we break or do we bounce again to the downside? That is, of course, always the question. We could easily also stay in this triangle for longer than we think before we actually break out. If you look at recent price action, a lot of price action was around this level, and we've just been bouncing up and down ever since that moment. So in that regard, a continuation of that could happen for some time until we get a decent breakout. When the breakout happens, though, we know which lines could be important for judging to which direction the breakout will occur. Let's take a look at the dollar yen. The dollar yen is very interesting. Let me zoom out first just in case you are not aware, but the dollar yen, of course, had a tremendous upside impulse during 2012 and 2013, and we got some continuation of that. After this triangle, we got a continuation, a breakout to the upside, together with this, that is in the same direction, same trend as the previous impulses. Now, what is happening now is a hook back, right? We broke out and we're getting a hook back, and a potential continuation is possible. We bounce off the 50% fib of this entire up move, which in itself, of course, is a very major key level that can provide support for the market. All right. If you look at the target potentials, you can see that when we do break above this top, which would be the confirmation of the continuation, then the targets would be at 107.85 and 110.92. But first of all, we're not 100% sure that we will get the continuation. All we know is that we did bounce off the 50 fib. Then, of course, we'll have to see if we can break this top. Then there's a higher likelihood of upside continuation to those targets. What else, though, makes me think that we could see that upside continuation? That is this. If you look at the weekly chart, there's one major signal, in my opinion, and it's this weekly pin bar. Major wick at the bottom, a bullish close, a classical pin bar right off the 50 fib as expected. So, as we said last week, the 50 fib provided the bounce, and will provide the bounce most likely. It's exactly what it did, and there's a bullish weekly pin bar at that level, which is certainly a support signal. So there is a decent chance to move up now based off that. Anything else? Let me take a look at the 4-hour chart to see if there's anything else going on. On the 4-hour chart, you want to be careful still because there is the potential to make a retracement. But we're in this channel at the moment. As long as we stay in this channel, price could continue up like that. Eventually, though, I would like to see price break out of this upward trend line to make a more impulsive upside if it were indeed to be bullish. If we break below this channel, then there could be some downside. Be careful of this bottom because that could still be support because that's the low of last week's pin bar, and that could still provide the support to the upside. I think that is about it, in fact, from this dollar yen. Let's take a look at pound dollar and zoom out to the weekly chart as well. Now the pound dollar, let me get rid of this fib if I can. All right, the pound dollar weekly chart, obviously very bullish. If you look at this last price action, it's just a rocket, isn't it? Steep as can be. How does that fit in within the bigger picture? Basically, we had a breakout of a weekly triangle. You can see this triangle here, and price moves from the bottom to the top, paused at the top, then broke, pulled back, then continued, but it hasn't broken this top right in here, which is a major level at 167.30. The fact that that price hasn't broken through that level indicates that it could still be a bearish potential. All right, if we do break above it, there's a higher likelihood of bullish potential up to 180, for instance. For the moment, though, you can see there's the potential for price to struggle here, a lot of wicks, and we're caught in between resistance and support. So we can stay within that range for longer, or if we do break above resistance, we can move up, or if price were to break below, you see these tops right in here? Right there? These tops, first of all, here, 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 and here, and price stopped here at that precise level, right? Broken resistance becomes support in the future. If price were to break below that and the trend line, of course, there's some space potential to potentially fall here, and the fibs could still provide support, but eventually maybe we'll see a bigger acceleration down to the trend line. All right, so that's potential to the downside. Upside, more potential, most potential above the red line, and in between the support and resistance, we can do basically anything and just bounce up and down as long as we like. This is the daily chart. You can see how much it's bouncing up and down. Pretty choppy price action. In that regard, I like the dollar yen a bit more than this pound dollar. But if you look at the most recent price action on the 4-hour chart, what do we see here? We see a down momentum. So for the moment, I do think there is a potential to move down. Also, if you look at the daily chart, what do we see here? If you put a trend line on top, what do we see? A potential resistance there. And if you compare that trend line and compare this trend line of the oscillator, we're making higher highs on price, but we're making lower highs on the oscillator. And that means divergence. All right? There's daily divergence, double daily divergence, which definitely supports the fact that price could retrace lower. Doesn't have to. It already made a decent retracement right here, and the price fell about, I believe, 400 pips on the top of my head. Something like that. Yeah, roughly like that. So of course that is already a decent retracement, but a daily divergence, especially a double one or even a single one, could cause more retracement, and that's definitely what could happen. Also, we broke out of this trend line like this. We could put it as a support line. We broke out of that as well. So this could be just a hook back for more downside. At the moment, this is my main thought. If you look at the 4-hour chart, we see this downside momentum is pretty strong as well. So if we put a fib on, for instance, this last move down, we can see price roughly stopped at the 50 fib. So if price were to stop right here, we could see that downside continuation. If not, and price were to break below this bottom, then that bearish scenario I think is out of the window, and there could be reason for the pound dollar to continue to at least test these tops. Is a big likelihood, I think. If we stay below this red line, then it looks more bearish. So that's the important line, in my opinion, 164.70. If we stay below there, we have a potential to move lower. We would still need to break below this trend line. Let me make that a bit different color. Let's say let's make it green. Still below this, a break below this green line would indicate the bearish potential, and we can see a fall down to the minus 272 at 161.50, maybe even down to 160 at the minus 618 target. So that's the most important lines in the pound dollar, this green one and the red one for the moment, regarding the shorter time frames here on the cable. All right, so let's see. Let's move over to the Aussie. And the AUD definitely bearish, just like the yen is bearish, and we're seeing that dollar yen upside in general. The Aussie, just like the dollar yen, also made a correction. The AUD did correct up, and we've had 2 weeks of bullish price action here on the Aussie. Right, 1, 2. Those 2 bullish candles are in fact, somewhat of an exception within this massive downtrend on the Aussie dollar. The downtrend definitely very well visible. We had a good triangle here, a long triangle, and a fantastic break of that triangle with a tremendous downside thrust, hook back to the 50 fib, and now continue. And we broke this bottom. So in that regard, the Aussie certainly looking bearish, or certainly in a downtrend. The question is, will this downtrend continue, and if so, from which spot / which level? That is the main question in my opinion. And if we look at this weekly and zoom in a bit, we can see a key weekly fractal, a key weekly resistance right here at 90.80. All right, so that level is not a level that will break without any struggle, most likely. That is a key level. Price most likely will stop at that zone to either reverse back in the downtrend, or at least pause and stop and respect it. Now the question is, of course, will price indeed turn here or not? That always remains to be seen, but there is a pretty decent chance that it will, and if not, then at least price will stop there, as I said. If price does break above it, we have a 50 fib still as resistance, so there's some space up to the 50 fib. Then if we break the 50, some space up to the 61.8, and the story continues if we break 61.8 up to the 78.6 with this scenario. All of these fibs, though, could still be bouncing spots for more downside. All right. Now, what happens if that is the bouncing spot and we do break below this bottom? Then there's a good chance to fall down to 84 and 83.50, where there's 2 minus 272 targets of the previous 2 fibs. And if we then take a look at the daily, we can see that would be the confluence right there, the target of the downside. Okay. Now for the moment though, there's a lot of power to the upside. If you look at the 4-hour chart, you can see there's a pretty good thrust here to the upside, and the question is that thrust finished or not? That's a good question. What price action signals am I looking for, basically? One way of looking at it is a break below this smaller channel right in here, which we're doing right now. But we also need a break below this support level of 89.20. That level itself could already be an early indication, although not the full indication yet, because there's still a support level here, which I would be careful of, and I'll put a green line there too. Those 2 levels are pretty important. I think if those 2 break, then there is a good chance to continue the downside, and then this was probably the max retracement there was. The next confirmation, though, of course, would be a break below this support line. So those are the support lines right here. where price could continue up to the 38.2 fibs. But if they don't and price pushes through them, then we're getting more confirmation of downside to come on this odd USD, and the odd weakness trend, just as maybe the yen weakness trend could continue again in the remainder of February, for instance. So those are interesting trends in my opinion. The euro and pound are, in my opinion, more difficult because basically they're stuck in wedges and triangles. So those are always more difficult to trade, I think. With that said, let's take a look at XAU USD. I think that's really because I think this is really nothing else to say in my opinion. We have already divergence on this 1 hour chart on the Aussie. You can see between the tops. That would be one indication that the short-term power push here on the Aussie that has divergence now here between the tops could be over indeed. So how about that XAU USD? Let's take a look. Let me put a blank template on the chart and take a look at the weekly. XAU USD is also in the downtrend, obviously. Massive break of this triangle that we had, of course, a couple of years ago. That downside has been prevalent ever since September 2012 now, so that's been a while. And very strong downside. And if you put a fib on that downside, you can see price went back to the 38.2 fib, which was a resistance level for more downside. So that already is a pretty shallow fib. The next resistance could be, for instance, the 50 fib or the 61.8. Also, there's a resistance bottom here. Price used that level as a bottom. It could use it now as a resistance in the future potentially. So if price were to move up that high eventually, then that could become a resistance because of that. Now, more recently though, price has managed to break below or above, excuse me, this downtrend channel. And that break could be a bit of a bullish bounce. That break also happened after we had a double bottom. We didn't know it at the time, but it turned out to be indeed a potential double bottom here. So that could be a reversal sign slash bigger retracement signal. And the question is, will we retrace to higher ground or we will continue with this downtrend? If we do continue to the downtrend, there's a 50 fib at around 1080, which we should be aware of the entire upside. If we do break to the upside, then we are looking for probably a break above this resistance here, which is happening right now, or well, potentially happening right now. It depends. Price is trying to, let me say it this way. And the question is, how far could we go? Well, we could put a fib on this upside here and say, okay, let's take a look at the targets, right? And the target could be minus 272 to minus 618, for instance, at 1304, 1340, and maybe eventually up to even 1420, where there's the bigger resistance. All right. We also have the potential to take a look at the 4 hour here and see, yeah, we're breaking a bit as we speak, in fact. So let's see how far this break could go. If that break doesn't go too far and we don't post good candles outside, then that maybe was a false breakout. But for the moment, I wouldn't necessarily count it. I'm just telling you the scenarios that are possible. If we do still break below this lower green line, that would be a potential reason to take it to the downside. That could be the break of this triangle, this green triangle on the chart, to the downside here. Okay, so that would be basically the lines in the sand, in my opinion, the most important levels to keep an eye on. Also, of course, these horizontal levels at 1230 are important support. Of course, also this resistance level here at 1280 important. If we break that, there is always the more chance of a bullish slash bearish breakout depending on which side. 1280 here, 1230 here. Well, that's the XAUSD. We're in slight uptrend here at the moment. Question is, how far could it go before we bump into a bigger resistance that could send it back into the downtrend or for a slight retracement? For the moment though, the bullish breakout could see these targets to the upside. Well, that wraps it up, folks. Thank you so much for joining. Unfortunately, I saw a few of you joining a bit later. Apologies for that, but we already looked at all of these. In fact, the euro dollar, pound dollar, dollar yen, AUD USD, XAUSD. But I thank everyone for their attention. I hope that those that are came a bit later, that they still will take the time to look at the recording. That will be available soon. Within a few hours, you should have that in your email. And if not, then register at blog.binary.com/weekly trading room, and you will get that warning email when the recording is ready. We'll be back next week on the 17th of February, of course, same time, same place, 8 a.m. GMT time on Monday. Thank you all so much. Wish you all great trading, and cheers.